Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Lightbridge Corporation, ticker symbol LTBR. And so here I am recording this on Tuesday, June 25th, after the market has closed, and Lightbridge closed at a price of $3.23, being up over 27.5% on the day. So looking pretty good. And so I have to say, before I get into the video, the reason why I'm going over this is because I got a couple requests to go over it. People seem to be excited about it. And so I just wanted to share my take on it. And so, there's some things that do stand out to me as being a little bit concerning, but then I'm just going to go over some of the things to look for if it is to continue higher, and some things that do stand out as looking bullish to me. And so the first thing, I'm just going to start with the bearish stuff, or the things to be concerned with, is that it moved up nearly 30% on the day, so already missed a pretty big move to the upside. Don't want to be chasing something that is up so much. Another thing that does stand out is really just these three lines here, or specifically the white line at $3.25. We've gotten multiple wicks up to that level, effectively forming a triple top here, and been rejected. Haven't gotten one close above 325. The highest close actually was at 325, which was hit on May 20th. So that does suggest that that is a pretty significant level, and we were not able to close above it. However, in the after hours trading, we are above it at 329, being up almost 2%. So maybe there's something there. Seeing that we open above it tomorrow, that could be a good thing. But then also I do have this yellow line drawn at $3.33. And so we do have a double top, two pierces going through that level here, having hit a high on the day of $3.37. And so the reason why I have that line drawn there at $3.33 is if we do take a step back in time, we can see these lows hit between May 4th of 2023 and May 8th. We did get a low of $3.32, but the lows on these other 2 days, the 5th and the 8th, that low was $3.33, also 333, just being fun there. So I do think that is a pretty notable level, because that was, the bottom here before this, let's see, 100% move to the upside. So I do think that one will be a notable level to reclaim, which we have not done yet. We've just gotten a pierce of it. And so some other things that are starting to get into the bullish territory, but still a little bit bearish. While we did see a high on May 21st of $3.36, we got 1 penny above it today, so that does seem bullish. However, what we really need to be seeing are closes above these highs. We got a wick just a little bit higher, just a penny above it, but then got rejected and actually closed lower than we were closing on the 20th of May. So I don't think that looks that great. It does suggest there is some weakness. And another thing related to that suggests potential weakness is, with this being a higher high in the stock price, we actually see a lower high in the RSI. And so that is bearish divergence. So it doesn't seem that great. However, we have to factor in momentum and what's going on with the stock. And so if we look at the volume that's been traded going back until the beginning of March, just where the cursor is, right around where the Ed starts to block it, I can actually move him so you can see volume is pretty flat going all the way back to, let's see, the cursor here is the beginning of February. And we start to see an uptick in volume here when we get this big move, so it looks nice. And then, a similar move in volume on the 20th, but we get this massive move to the upside. So pretty great, but there wasn't a lot of volume backing that move. Now that we've seen this pullback, a more than full retracement, we see a massive surge in volume. So on the 20th, we saw volume of nearly 400,000 shares traded, whereas today on June 25th, we saw more than double that, over 900,000 300,000 shares traded. So that's a massive surge in volume, looking pretty good there. So that makes me think that this move could be continuing higher because we see a surge in the volume. And while we right now see bearish divergence, if we get a continuation to the upside, I suspect the RSI will be breaking above this high, and then we will have negated that bearish divergence because we will have gone above the high in the RSI that was hit on May 20th, which was 72.49. Currently, it's at 68.82, so we want to see that RSI going to the upside along with the stock price. And so what I could see as being a pretty good move is some consolidation around these levels, ideally not getting any more closes below 325. Ideally, in the perfect world, getting closes above 333. But if we do start to see some consolidation here and it is not pulling back that much, I think that means this could be continuing to the upside. So I would think that looks pretty good. So even though we basically missed a 30% move not being in the stock today, I think we could see some consolidation here and a continuation to the upside. And on the note of continuation and thinking about levels we want to see respecting, I'm going to do a couple Fibonacci retracements that could suggest that the bottom is in down here, or I guess working with the assumption that the bottom is in down here and thinking about the levels that we want to see being held. And so I'm going to do the retracement from the high here at 670 coming down to the low here of 221. All right, and so with those levels marked to the penny and that retracement done in yellow, we can see some lines that we want to be holding. And one of those is going to be the 236, which is at a price of $3.27. So that being a little bit more conservative of a level than 325. We want to be getting closes above 327 to suggest that we are holding the 236 and that we are going to start making our way higher. And another thing that actually, by coincidence, looks pretty good about the chart here is from this diagonal line drawn from the high of 670 down to that low of 221. It does look like we have broken out of this falling wedge effectively, that we did get a breakout and a rejection from 333, pulling back to retest or retrace to the scene of the crime, which would be that downtrend, also coinciding, with basically a double bottom here. And so I do think that could be a very bullish sign that we have broken out of this downtrend, that we have retested it, and that we may very well be starting to reclaim 333. So I think that looks really good, and I would be looking for not only a hold of that level, but an attempt at 392.5, which is the 382, potentially getting up to $4 a share. I would think that'd be great, but I also think that we might be bumping into some resistance around $4, considering there were some bottoms that were formed around then. Those bottoms could be resistance. Getting into this consolidation here might be a little bit tough, but I do think that we could be potentially making our next move up to 392, so keep that in mind. And then one other retracement that I'm going to do, this is actually an extension, and so I'm going to do that from the lows here at 332 up to the high of 670 and then down to the low of 221. All right, and so now with those levels marked to the penny, I just wanted to get an idea of where this might be going, where we might be finding some support to the upside, or some resistance to the upside, or maybe it's some support to the downside. And so the next level up kind of makes sense. The 382 is right around a price of $3.50, thinking in dollars and quarters or dollars and half dollars. $3.50 does make sense there. And then a pullback to the 236 would represent getting to a price of right around $3 or 301, rounding that fraction of a penny up to $3.01. that could be a level to dip buy at before the next leg up if that is to continue. And if we do look at the chart here, we do have a pretty good amount of consolidation below where the cursor is, so below $3 a share. Did get this consolidation here, so that could be acting as support. And if we do throw up the volume profile, we do have this nice volume shelf here, along with the volume point of control at $2.89.3, corresponding with right around $3 a share, or actually, just below it, but that is when that volume shelf really does start to pick up around $3 a share. And maybe we see some wicks down to $2.90, but closes above $3 a share. Those could be some nice dip buying opportunities if we do retrace some. And also the volume average high looks like it is $3.21. We did close above that today, and we are going up now over 4% in the after hours. So it is looking pretty good, I must say. But getting rid of that volume profile there, we can see, like I said, the next level up is 350 at the 382. But really, as long as we're holding around the range from, let's say, 321, considering the volume average high, going up to 333. As long as we're holding in that range, I'm thinking it's looking pretty good. But with price getting up to almost 337 in the after hours, which was the day's high, I think that this definitely looks like it could be taking off, and we could be seeing price getting up to not only 350, not only $4, also corresponding with the 50% level, 390 from the white Fibonacci extension that I did. Also the 382 here, like I had mentioned, 392.5, maybe getting up to 450, or this golden pocket here marked in yellow, ranging from about $5 up to $5.13. So I could definitely see that happening. So, while I do think it is a bad idea to chase, I do think that this chart is set up to continue running because we have seen this massive surge in volume, because we will be negating the bearish divergence if we do continue higher, and because we have already tested these highs multiple times in the past. You tap on it a couple times, eventually you're going to break through it, and I think that we could be seeing that time with this breaking higher. So, I could see $4 a share in the next week or two, but I could also see a retracement to $3. So good to have a plan for that pullback if it does happen, and also a plan to trim. So, not risking holding the bag if it whips up to 670 and then the following day whips back to $3 a share. So good to not chase, good to have a plan before entering a position. And I think that $3, 321 to 335, 350, and $4 are all going to be key levels to be paying attention to, and having a level to trim at, maybe $5 a share. I think that's a good idea. But those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.